Hi everyone, welcome back to my channel. In this channel, we talk about money, personal finances, and how to build wealth in Canada. In this video, I'll say something really bold. Universal Life Insurance, or UL, is a bad idea. If you are someone who is looking to buy Universal Life Insurance, or if you've already bought one, this video is for you. Now, before jumping right into what is Universal Life Insurance, let's see some popular life insurances in Canada. There are several types of insurances, but for this video, I'll only talk about three popular ones. First, term life insurance. Second, whole life insurance. And third, universal life insurance. Term life insurance is the most simplest and affordable insurance type. It is simple and straightforward. You pay a premium, and that premium does not increase for the time frame. Whole life insurance. Whole life insurance has two components. One, insurance component. The second one is cash or investment component. In this insurance type, you are protected for life, plus you also have cash component. Whole life insurance is expensive than term life insurance. The investment component is stable and predictable. Now let's talk about universal life insurance. Universal life insurance is the most complex insurance type among these three. It is the most expensive insurance type. Like whole life insurance, UL also has two components. One is insurance component. Second is investment or cash component. But here's the catch. Unlike whole life insurance, in universal life insurance, you have to take the risk, whereas the company charges you management fee and takes the cut. In universal life insurance, the insurance premium grows every year. When you grow older, your insurance premium sometimes are so high that your investment component is unable to afford your insurance component. There are so many news articles where people in old age are unable to afford their insurance premium and their policy gets cancelled because of that. Now let's break this down further to see why universal life insurance is a bad product. Let's take a simple number. Let's consider that your universal life insurance is $300 a month. Typically, UL ranges from $300 to $500, but of course, it depends on a lot of other factors like your age, your health, and so on. But for simple math, we pay $300 for UL. For this typical universal life insurance, after 10 years, your cash value might be around $20,000. Now, let's consider another scenario where you would have invested this money yourself. Let's see how that would have turned out. Let's say you have $300 and you buy a term life insurance for $30 a month. And now you have a surplus of $270 a month. You invest that $270 in, let's say, S&P 500 ETF, and with 8% rate of return, you'll have around $50,000 at the end of 10 years. So if you went with this strategy, you would have an insurance that would protect you, plus a cash component that is higher than a universal life insurance. Now, I want to share a personal story because I want to be real with you guys. A couple of years ago, I actually bought universal life insurance. Yep, I fell for it. I was told that the policy is flexible and it is a great way to invest money, and I fell for it. To be fair, universal life insurance is the most flexible one out of these three. However, there are so many fine prints that you have to read them all very carefully. They allow you to pause the insurance without completely canceling it. They might allow you to lower the premium or the face value. However, as I said, there are so many fine prints that you have to read them carefully. Now let's summarize. The bottom line is universal life insurance is a bad product. It is not good for you. Unless you're super rich, universal life insurance is overhyped in Canada. It is very unfair because you have to take all of the risk, whereas the company takes the management fees and all of their charges. In universal life insurance, your insurance premium increases every year and your investment component may not be able to afford the insurance premium once you grow older. So if I had to give you just one advice, it would be never combine insurance and investment together. If you are thinking of buying a universal life insurance, please don't. Instead, consider my strategy where you buy a term life insurance and invest the surplus money yourself. And if you want to know more about what I did for my case, how did I get out of that life insurance, please comment down below and I will get back to you. See you in the next one.